but we'll give it a shot here. We had a pretty good day on Friday, so, and some carryover perhaps for some of you. Feeling good. I'm actually sitting up now, sitting up in front of my desk. So so far so good, I should say. So far so good. Got my screen shared here. Going around the horn, as far as the markets on Friday, we obviously saw a big rally in the stocks on Friday. The trade that we had taken during class was here on the pound dollar when it dropped below that 4,500 level. We didn't catch it during class, but right after class, a couple of hours after class, on this small dip right down in here to this low, we were able to capture enough to hit our 1-to-1 risk reward. So that was a nice little Friday for us for 50 pips on the pound. Pound is still showing some signs of weakness here this morning, but we may look elsewhere for potential trade opportunities. Other trades that we had from Friday that we were looking at a break of this trend line here on the euro dollar. I think the big market rally was able to help the dollar gain some strength against some of these other currencies. You can see the euro dollar, we were looking for this longer term trend line. It broke down below right in through here. This was actually at the market open on Sunday. We didn't really get any. One thing I was looking out for last night was any type of negative tone coming out of the Chinese stock market. I thought with how volatile our stock markets were last week that we could potentially see some downward action in the Chinese stock market at the open. However, the Chinese trade balance report, which is actually a big report out of China from a trade standpoint, came out positive. So it actually made the Chinese stocks move upward. So a lot of this dollar strength that we've seen is coming off that risk-on effect. If you would have taken a short trade right in through here and just put your stop above a swing high, you could have been in for a profitable trade there. You can see the dollar has been getting stronger here versus some of these majors. Versus the yen, again, global stocks have been up, so dollar strong versus the yen. The dollar's been strong versus the pound. Dollar's been stronger versus the euro, stronger versus the Swiss. Along with that, we've seen some, speaking of risk on, oil prices recovered a bit on Friday and into today. We saw this right in through here on the dollar CAD. CAD stronger, New Zealand stronger, and Aussie stronger. So that's kind of created a more of a, we can tell everything is kind of trading risk on, which means that market's up, the dollar's been up against these four majors, and your commodity currencies, which have been trading lately, risk on also. CAD getting stronger, New Zealand and Aussie also getting stronger. So the only problem with today is, with it being a bank holiday here in the U.S., is, you know, during the U.S. session, even into the Asian session, we may see a lack of liquidity, which could create some pretty volatile potential sideways action. Key news actually for today, and where are we at? We're at the 15th here. So global markets have been up after China trade balance came out above expectations. U.S. markets are closed, so there's going to be a general lack of liquidity. Retail sales, that was Friday actually. Draghi's coming out and talking at 9 a.m. Eastern time today. You can kind of see it here. Draghi's coming out and speaking at 9 a.m. European Parliament's Economic and Monetary Affairs Committee in Brussels. So he's going to be speaking about monetary policy. I think anytime Draghi comes out and talks, that should be happening right now. You can expect him to be a little bit more dovish in his tone. So that actually works in the dollar's favor also against some of these other commodity currencies right in through here. A couple of trades that I'm looking at actually I would deem to be a little bit more short term as far as overall direction goes. We'll take our first look here at the euro dollar. if you were able to capture some profit off of that, nice. With Draghi coming out and talking today, it's retracing back up just a bit. And I would highly doubt that the euro, with the lack of U.S. liquidity coming into the markets, with it being a banking holiday, I would look at it as a kind of a net negative as far as the amount of liquidity that could push the euro up. We're not going to have China, we're not going to have the U.S. stocks opening, and we're not going to have that underlying volatility in stocks. That's generally pretty good for creating more movement during the U.S. session. So I was looking here at the euro dollar, and for you PitView users, I was looking at this 112 level right in through here. I think the interesting thing about this trade right in through here is the fact that Draghi is speaking. And I'm whenever Super Mario comes out and talks, I kind of always expect him to be a little bit more dovish in his tone with the markets. And I was sitting here watching the imbalances, and it has been gradually coming up. I mean, it's showing more buying pressure, and we are still in the midst of the London session is still open until noon today, and European session. And I was sitting here watching this because it did break through the 112 level here overnight. If you would have taken any short trades, let's say on like London momentum, you probably could be in the midst of this trade. But since I'm not in anything yet, I've been just kind of sitting on the sidelines a bit because of, like I said, the little bit of lack of liquidity involved in these trades. I am looking for a potential for trading this to the short side. And let me see here. Let me go back up above here and kind of explain the trade here to you. Looking for a sell entry. And I'm watching this right in through here. It's making higher highs. It's causing everything to go up in here. But again, if I'm looking, and there's a little bit of a divergence, I would call it more sideways actions on the LP trend line. I just don't think there's been a whole lot of liquidity since Friday afternoon. I think that's what's causing this to kind of go more sideways right in through here. So what I would be looking for, if this goes -5, it would take a huge amount of selling pressure to take this -5 in the next couple of hours. So below 112, as long as it's below that 112 level, and if it goes -5, I would be looking to get in. It's already showing some bearishness. The euro is coming back up a little bit on this little candlestick. These candlesticks aren't worth that much right in through here. It's up about 30 pips since the beginning of the U.S. session. But if we can get that, I would put the stop on this, probably 1 pip above the swing high. After it kind of broke through, it's really has been kind of bouncing up and down here. So I would call this kind of the swing, lower high, lower low, lower high, lower low. And this is kind of the swing right in through here. And you can look for a 1-to-1 risk-reward ratio. It's already broken the trend line. But again, we're not going to have, we don't have any huge volatility expected with no U.S. markets to drive, that whole risk-on, risk-off effect. So you kind of got to tread carefully. So that's why I'm looking for a little bit more when it comes to confirmation here. Let's see here. Bring this up. You can see here, if it does go -5, you'd be wanting it to come down below these lows. You'd be wanting it to come down and break through on that trend line to start making lower lows, which I think it would probably do if it if it did go to the negative side, because it would take a large amount of liquidity to drive it down, or not a large amount of liquidity, a large amount of action by the liquidity providers, which are still open in London. Currently showing a little bit of buying pressure in there. And in this case, we're not really looking for dollar strength. We're looking for more at euro weakness. Should Draghi say anything that's overly dovish? But I think the market's pretty much expecting what him to say. I think he's going to come out and reiterate the fact that they're going to look for extensions on their QE program when they meet in March. And perhaps going into more of a negative rates. And then also on the dollar Swiss, the same trade exists. On Friday we were looking at you can see this one's even a little bit more extended to the upside. Friday we were looking for this to come up above this 9,800 level, which it obviously has. You can see that this is very much has broken the 9,800 level. Where there was some resistance there, and it's continuing its move to the upside. And this is also trading not just euro weakness, if you will, but also Swiss weakness is one thing that we're looking out for. And this does have a little bit of room to go to it. You could almost take the first, whichever happens first here. If this dollar Swiss starts to make any momentum to the upside, right now it's at a +4, and it's already been starting to kind of make a break up into higher highs. Here, I'll pull it up on the other chart here. It's already been kind of breaking up in the last couple of hours. It's kind of hard to see it down in there, but you kind of see it's starting to kind of move off its lows and break up just a little bit. It's hard to trust something that tracks liquidity providers, though, when you're looking at a general overall lack of liquidity. But in this case, what we'd want to be careful at when looking at the Swiss is if it does go +5, I would welcome the chance to be able to buy dollar Swiss. But that 9,900 level is a little offsetting to me. So you could look for almost the same thing on the euro dollar. Instead of shorting the euro dollar, you could be looking for opportunities to buy dollar Swiss on that same thing. It's above 9,800 if it goes +5. But what I would do is I would just put in a 30 pip stop, or make your take profit and stop levels be within that underneath that 9,900 range. So that's why I'm kind of focused more on the euro dollar. They're going to move pretty much in tandem with one another, as they have been. So that's why I'm kind of looking at the euro dollar, because I think if that one breaks, it has a little bit more room to go. So between the dollar Swiss and euro dollar, I'm going to kind of go. I was showing that dollar Swiss just because it's kind of making the same type of movements here. But between the two, I do like that euro a little bit more because it gives a little bit more added confirmation. Generally, even though the Swiss is not fixed to the euro anymore, it's still highly correlated to it. Here, I can take some of these objects off the list here. There we go. And then on the pound, I'm going to zoom in on the pound just to the intraday action right in through here. I keep on pulling up the wrong chart. Why am I doing that? There we go. I almost double dipped into the pound here because the pound came up and made an A, B, and came up to the 78.6 and looked like it was making a C. Broke down below a trend line again and made a sustained break below that, kind of broke below that 4,500 level again. If you wanted, and pound has also been showing a large amount of weakness also. With oil being, you could probably expect oil to be less volatile today, which has been kind of one of the driving factors on the pound also. But I think the dollar's been driving a lot of this action versus the pound, versus the euro, versus the Swiss. So another one that you could look out for here, and I was looking right at, because it's made a lot of support here right at this 44.50 level. And this would be almost a pure just intraday trade, if you will, much like on the euro dollar. You can see this one's actually pointing, it's pointing down right in through here. It's been steadily making lower lows, lower highs on the LP trend line. Looking for a sell entry on a break through that support level, which is right at the 44.50 level. And then the stop, you could use a 3-bar reversal. You could put your stop I would just put my stop, whatever, came down and bounced, came up and has created these highs. I would just put my stop right above these highs right in through here. Not look for a huge amount as far as your take profits go. There we go. And just look for a limit of 1-to-1 risk reward. And again, this is one, since it's more also momentum trade, everything's really working out in our favor on this. And the pound has still been very, very weak. But with China being up, markets kind of settled down a bit, or it could be the calm before the storm when the U.S. equities open up tomorrow. Whenever there's a little bit of optimism in the markets, it doesn't take much for it to be beaten down again. So it'll be very interesting to see how the U.S. markets open up tomorrow. So, this is more like a 24-hour trading scenario as far as looking at the pound, the euro, more intraday type of trades. I think that, both, on the euro and the pound, both of these are kind of the same direction. Kind of leaving the Swiss out a little bit just because of the fact that it's already moving up and it's already up above. It doesn't have that far to go before it hits its head off the 9,900 level. So the pound and the euro are kind of the same trade. You can almost treat it as a one cancels other trade. Whichever one hits first to take it. if you want to, look to minimize risk. Both those look pretty good, if you will. Looking towards, the next, the real question is going to be here at 5 p.m. As the Asian markets start to open, and then we get the overnight as far as the global markets opening overnight. I think the real question in my mind comes into play. Is, where, we should still probably look to trade in more of a risk-off scenario, if you will, into retracements. So I'm gonna let me bring up something like here. Let me bring up CAD yen real quick. There we go. See, now that these have retraced back in through here, I actually like these retracements. Haven't really shorted CAD yen yet because it hasn't really given us any signals. But you can see here, it's highly consolidated here, and it looks to be making a double top right at that 78.6% retracement. This would be more of a risk-off scenario, and you never know. This thing could go sideways for a while, if you will. But the fact that it's breaking through this double top, or I'm sorry, it's not broken through this double top yet. It's right at the 78.6 level. We like those 78.6 retracements, and it's just hovering right in through here. So it's highly consolidated. We already know if the markets continue trading in more of a risk-on fashion that the euro dollar will probably go down, pound dollar will probably go down, and this would probably still continue going up because the yen would continue up. But you can see this one also is meeting a lot of our parameters, sitting there making a double top. It's made a 78.6% retracement. You could almost pick one here, but I really like the idea of selling this CAD yen right at that 78.6 level. There we go. By looking for it to break down through, just treating it like a regular double top formation. Bam, bam. It's formed the semblance of really a shorter term trend line right in through here. So it looks to be siding out a little bit, kind of forming a top. So just treat it like a double top formation. And this could take, this one's been consolidated now for what, 12 hours? It's been sitting here consolidated sideways, so not really moving at all. But I think if it does kind of come down and move down below these levels, that we can look for sells on this, on the CAD yen. So, like I said, it's already showing negative, but we wanted to break this double top. And on this one, we can look for a limit of 1 to 1.5 risk reward. So if you're risking 50, you can look to make 75 back. CAD yen, even though we've gotten stopped out on it a couple times when we've been using that 1 to 1.5 risk reward, it's actually been working out very well in our favor. Plus we got everything working in our favor. We got the double top up here. We got this pointing down right in through here on the LP. Almost have a -5. And now all we need is for it to break through consolidation, and we'd be in business. Because it certainly has not broken down yet. There we go. Go ahead and delete all those real quick. You can see a lot of these commodity currencies are making the same types of formations there at those levels. See, like New Zealand yen, it's coming up that 78.6 level also. Aussie yen. So the Aussie yen's making that same type of double top formation. Heck, even if you wanted to, you could probably replace CAD yen with Aussie yen. Aussie has some news coming out, their meeting minutes, and then the New Zealand has their retail sales coming out overnight. So that's why I'm kind of sticking with more of the CAD on that, because they have, all those commodity currencies lately have been, pretty highly correlated to one another, to where they've been moving pretty much in the same direction at the same time. So that's why I'm kind of choosing the CAD yen on that. But you can see, Aussie yen is making that same type of double top formation right there, right near that 78.6 retracement. And then you could even look at dollar yen if you're looking a bit longer term. If you were to go from like this swing high right up in here, see, it's coming right up to that 78.6% retracement also. So, I mean, a lot of these are making, some form of retracement to the upside. So these key levels right in through here are all based on, the market's been trading risk on. Friday, dead cat bounce up 300 points on the Dow, but it was still down 5 out of 6 days from a trading standpoint as far as the U.S. stocks go. And that was the same exact thing can be said for all the stocks, essentially, across the globe, been down last week. So was yesterday a rally? Was it a recovery? Was it a reversal of the downtrend we've been experiencing since the beginning of the year? No, it was, you could almost call it short covering, in my opinion, because, at some point, the retail sales were positive. So there's quite a few things that made the markets go up last week, or the economic numbers, to recover last week. So the point being that I do like I like the euro dollar short term. I like pound dollar short term. But longer term, these are probably the closest ones to executing, either euro dollar or pound dollar. But longer term, I do like that CAD yen. I like CAD yen. You could even look at the same types of trades on Aussie yen, on dollar yen, but looking longer term into more risk off scenarios of trading into to CAD yen weakness, especially as more of the markets get rocking and rolling overnight. CAD looks like it's making a bit of a move here to the downside. It hasn't broken that low yet. Yeah, it came down here. This was during class time on, we went short right at the right time on Friday as it was coming down below the 4,500 level. And if you remember correctly, it got within like 4 pips of my take profit on this low. then came back up right at the end of class, and then right down in here came down and actually barely, but it was enough to hit my take profit there on pound dollar for that 50 pips. Then it came up and almost made a little bearish Gartley formation right in there on that retracement. So, but that 45, the 44.50 level seems to be the level that's creating a lot of this support right in here on the pound. So if it breaks through this low, it would be breaking through that 44.50. You can see, going back to the opening of the market here from yesterday, it's really been just, especially in the last 6 hours, it's been just consolidating right in through here. So all we're looking really for is a consolidation break. What is the euro doing? Since Super Mario is out here talking. What's the low? One thing I would point out here on euro dollar, by the way, see, I would keep an eye on this 111.50 level. If it kind of reaches the halfway point, we're obviously looking for it to go, for those of you that are more just pure support and resistance traders, if you're looking for an actual key level, I'm saying, sell it if it goes -5 below the 112 level. But if you start to see it past this halfway point, right at a 111.50, and as long as like the 1 hour total is like negative, as long as everything's going negative, that's another way that you could look to sell it. That 111.50 level, and then just put your stop. If you put your stop right up above this swing high, that's 111.942. So that could be your trigger point also, is that because if this thing starts dropping, it's going to be because of any type of verbiage coming out of Draghi. It's going to last, Draghi's speech is going to last a while. So, but you can't expect anything bullish to come out of his mouth. That's the good thing. So let me do one more sweep here to see where we're at, because I only really got 3 trade scenarios that I'm going to be looking at. So CAD yen is still just hovering right in there. Pound is still just hovering right in there. Euro dollar is the only one really making a larger move. Starting to look more negative. We shall see. Give it a chance to gain some momentum there. So there you have it, kind of 2 more short-term trades, kind of for the intraday U.S. markets, and then more of a long-term play. I'm still looking short-term just for dollar strength, based on the fact that U.S. markets are closed, but long-term still looking to trade, if we get one final dip of risk off, being able to trade into more of a risk-off scenario. So you can almost say the same thing as far as strategies go. We are trading more technical. There is a lack of liquidity. We are trading U.S. dollar strength versus pound and euro, or you could call it euro weakness and pound weakness. In our risk-off scenario, double top on CAD yen. Looking to short. Some things we may look out for tomorrow morning. Let's see here. I think I saw a couple of things on here. Like the pound CPI. It's coming out at 4:30 a.m. That's always a big number. Consumer price index, basically their inflationary numbers can always be pretty big numbers for the pound. That's why we're looking to trade more short term on that pound heading into that CPI. They are expecting a rise of 0.3. If you look at those CPI numbers of where they've been, you know, going back to September, 0, negative 0.1, negative 0.1, 0.1, 0.2. In January, you know, for January CPI numbers, I think 0.3 is a little bit of a stretch, but you never know. But that's always tends to create some volatility there on the pound. European numbers, you know, as far as the economic sentiment, the euro numbers, I'm not real worried about. So the, you know, next 24 hours, the only one you really would be looking out for would be on the pound. So let me go ahead and save this. All right, go ahead and put that up under our handouts. Tomorrow should be an interesting day once U.S. markets do open. So take it easy today. I mean, don't look for any type of huge, I mean, we have that longer term scenario on the CAD yen with that double top, but, you know, don't look for anything, you know, too wild to happen. You know, the U.S. banks are closed, so that could dry up some liquidity in the market. So, I mean, with the U.S. stocks being closed, the reason why I said that could also dry up some of the volatility in the market. And the reason why I say volatility is because of the fact that, you know, with the amount of volatility that we've gotten whenever the U.S. stocks have been opened, that's what's really been driving a large amount of volatility during the U.S. session, is the fact that stocks will go down, you know, 200 points and then they'll come back up and go up 20 and then go down another. I mean, that's been creating a large amount of volatility during the U.S. session. So not only do we have a lack of liquidity with the U.S. market being closed, but you kind of also would expect, you know, don't expect any magical movements to happen or any huge movements to happen. But long term for the week, I think that, you know, even though we had the dead cat bounce on Friday, I think that we still would favor volatility from more of a risk off standpoint. So that's what that's the direction we'll kind of look more towards. So that's all I got, folks. I'm going to go ahead. Kids are off of school, so I'm going to go ahead and post this on the PitView site as far as the blog goes. Not take any wooden nickels. Nice. And actually probably, you know, look out for these trades and pretty much relax on our little mini U.S. holiday here. So if you do have any questions, let me know. But I'm going to go ahead and sign off here. So I'll chat at you later, everybody. Thanks for coming in today. Bye-bye.